5 years ago, something absolutely wild happened in the financial world. You had these amateur traders going head-to-head with Wall Street giants. It was the meme stock revolution. And it really makes you wonder, 5 years later, what's actually different, if anything?
I want you to think back to that one specific day, January 28, 2021. That was the absolute peak for GameStop stock. But it was way more than just a stock price. It felt like a symbol, right? A moment where the internet itself seemed to rise up and challenge the old guard of high finance.
And this wasn't just some flash in the pan. Barron's magazine totally nailed the feeling with this headline, asking how this revolt changed investing forever. That question right there is exactly what we're going to dive into.
So here's the plan. We'll kick things off by looking back at that 2021 revolt. Then we'll see how the everyday investor has changed since then. After that, we're going to pull back the curtain on Wall Street's new playbook. And finally, we'll try to figure out what the real, lasting legacy of all this is.
All right, let's start with a quick refresher on that moment, that financial flashpoint. What exactly went down back in 2021?
So at its heart, this was really a showdown between two completely different worlds. On one side, you had what we call retail investors, regular people, organizing on places like Reddit's Wall Street Bets. Their strategy? Buy up stock in companies that Wall Street was betting would fail. And on the other side, well, you had the institutional short sellers, these massive hedge funds that had billions of dollars on the line, convinced that stocks like GameStop were headed for zero.
And out of all that chaos, a brand new term was born, the meme stock. And this is the key thing to get. Its price had almost nothing to do with the company's actual performance. It was all driven by social media hype, by a viral movement of people all deciding to act at once.
Okay, so that was the spark that lit the fire. But what happened next? How has the individual, the retail trader, really evolved in the 5 years since?
Well, the single most important thing is this. They didn't just go away. This wasn't a one-time thing. That surge of everyday people getting into the market has turned into a lasting and pretty significant force that has to be reckoned with.
And you can really see it in the data. What's so interesting here is the detail. Yeah, the Wall Street Bet-style forums, they saw a big 49% jump in activity, which is huge. But look at this other number. The more traditional personal finance forums on Reddit, they exploded by 117%. That suggests this is a much broader, more mainstream interest in money.
And that lines up perfectly with what Thomas Peterfy, the founder of Interactive Brokers, is saying. He's noticed that his customers are just, more sophisticated now. They know more. For a lot of people, that crazy time in 2021 was like a crash course in finance, played out for the whole world to see.
The strategy has also grown up a bit. It's not always about targeting these specific meme stocks anymore. Now, you see the retail crowd getting behind these big, cutting-edge ideas that they really believe in, things like AI or the massive shift to electric cars.
But hey, the retail investors weren't the only ones taking notes. Wall Street got a serious wake-up call and had to adapt. So let's take a look at their new playbook for dealing with a world where the crowd suddenly has power. So how do they deal with a potential new GameStop that's starting to bubble up online? Well, they've definitely learned one thing. You can't just ignore it. Instead, they've built a pretty clear, proactive strategy.
And it really comes down to 3 key steps. First, they track. They use these sophisticated tools now like VandeTrack, and they're just constantly monitoring social media to see what everyday investors are buying. Second, they prepare. Lawyers are now telling companies, hey, have the paperwork ready to go, so if their stock suddenly skyrockets, they can issue new shares instantly and raise a bunch of cash. And third, and this is a huge one, they engage. You have massive firms like Fidelity showing up on Reddit, actually talking to people, answering questions in the community.
And that engagement isn't just about text posts. It's about their whole communication style. The old, boring financial report, it's being replaced by things like podcasts, stuff that's designed to reach this new generation of investors where they live, in a format they actually like and trust. It's a fundamental change, for sure.
And as the investor Jason Mudrick says, this is not a small adjustment, it's a systemic shift. Before 2021, the idea of tracking what people were saying on social media, nobody really cared. Now, he says, everybody has a tremendous amount of tools in place. It's just a cost of doing business.
So all of this brings us to the big question about the legacy of this whole thing. We've seen that both retail investors and the big institutions have changed their behavior, but does all that add up to a real, permanent shift in the balance of power?
On the one hand, you can make a really strong case for yes. There is no doubt that individual investors have more access to the markets, more tools for trading, and more information right at their fingertips than at any other time in history. It's not even close.
But then there's the other side of the coin, a really powerful counterargument. Because for all the new tools and all the access, retail investors as a group are still missing the one thing, the one key advantage that institutions have always had.
And that advantage is just size, raw financial power. Like this quote says, they don't have the size. A single big institution can move the market with one trade in a way that thousands and thousands of small investors just can't. And when you look at it that way, well, maybe things are still very similar to how they always were.
Which leaves us with this final, nagging question. 5 years after the revolt, the players on both sides have definitely learned new moves, they've got new gear, but has the fundamental nature of the game itself actually changed? Or does the house, with its incredible size and scale, always win in the end? That's the debate that's still shaping our financial world today.